The stock market is great theater. However, it is masking the truth. So what is the truth? The aftershocks of tighter monetary policy are beginning to be felt on the markets. The S&P 500 is currently 4% lower than its 52-week high set on January 26, far from the more than 10% decline required for a correction. In order to be a correction, the S&P 500 would need to drop to at least 2585. But according to Mark Tepper of Strategic Wealth Partners, the S&P 500 should end the year at around 2900. Those levels imply a 5.5% rise from current levels and would see the S&P 500 end 2018 with full-year gains of about 8.5%. The benchmark index came close to 2,900 at its record-making peak in late January. So how will it reach those levels once again? Well, summer just started and history suggests a sunny forecast. In the 35 times since 1950, when the S&P 500 rose at least 3% heading into the first day of the season, the full year was positive every time. And that trend is expected to reach its 36th year, according to Mark Tepper. So, that is one truth. What is the other truth? Let's take a look. Judging by the reaction in China, you'd have thought that global markets were in for a thrashing after President Donald Trump's latest escalations on trade. However, despite the trade wars, the central bank tightening, and declining economic fundamental data, and an emerging market crisis, according to this survey here from the National Association of Active Investment Managers, the active U.S. investment managers are presently more than 100% invested on average. So, while U.S. equities continue to charge ahead, alarm bells elsewhere are ringing very loud. And if you take a look at the lower portion of this chart here in the far right, you can see at that point there that the active investment managers are at their third highest level on record going back to 2006. And you can see that each time it peaked here and here, and then near here, there were events in the market, beginning with the great financial crisis back in 2007 into 2008. But then we had severe bumps in the market during the other times when the investment managers reached peaks in their investment exposure. So, perhaps this is another truth. We haven't talked about options much, but we'll talk about options more in the future. But this chart here shows a small trader call buying. And call buying essentially is you're buying an option. And when you buy an option, essentially you're expecting the market or the individual stock to increase in the future. And what we can see here is in early 2018, and then currently at the far right in the lower portion of this chart, we are at call buying levels where we were right before the great financial crisis here in late 2007, and then back here in the year 2000, right before the dot-com bubble. And as Bloomberg notes, the question of why American equities keep skating past the worst trade situation and increased equities, Jeff Carbone, a managing partner at Cornerstone Wealth in North Carolina, has said that we've had more negative catalysts and more negative pull this year than we've had for a long time. But the positives continue to prevail in the investors' minds. The investors are shrugging off the negativity and taking the positive to a greater extent that this is not the end. And as Bloomberg has noted, that the ignorance of risk is everywhere. Equity funds are only a trifle less long than at the height of the January euphoria and the January peak. So, it's in markets for call options, as this chart shows, where individual investors are engaged in a buying binge of historic dimensions. And this chart here, which shows the S&P 500 growth stocks, it's a chart that we've seen before. And as you can note there in the far right, the growth stocks are reaching levels that have not been seen since prior to the dot-com bubble. And this chart here actually dovetails with the chart that I just showed you with regard to the call options, is that currently the price of call options are now trading above their historic average. So instead of buying call options, I would probably do the opposite. I would be selling call options. But perhaps that's just the contrarian in me. And lastly, we'll take a look at two stocks real quickly that are being impacted by the trade disagreement between China and the U.S. And this first stock here is Caterpillar, and the symbol is CAT, and this is a 20-year monthly chart. And as we indicated previously, we took a look at this stock here. It looked to me like it was topping at this point there and then heading on down. The fast line has not moved through the slow line, but it looks like it's on its way. So something is going to happen like in this period here, or perhaps in this period there. And whether you look at that earlier period, this period, or this current period, what we're seeing, I don't think looks good. You can take a look at here, relative strength heading on down pretty quickly. The stochastics as well is heading on down. No sign of any bottom at this point in time. And also at the Williams heading on down at the midline. Looks like it's going to continue on down there. Back up to the price chart. You can tell it looks like it's in a nice topping pattern here. And then it's just turning over and heading south. I know we have one subscriber that's interested in this stock. Hopefully that subscriber has sold, because in my opinion, this stock is headed down. So let's take a look at one last stock. And this last stock here is Boeing. And if you're reading the news about Boeing, the trade relations may be a problem between China and the U.S. and selling Boeing planes in China. And if you read the news, the information regarding the company is pretty positive other than the trade relations. However, to me, the chart shows a little bit something different. Similar to Caterpillar, in my opinion, we have a topping process there. But let's go ahead and take a look at other oscillators. Looking at the MACD, we have a topping process in my mind. At this point here, we're a little bit above the slow line. The fast line hasn't turned quite yet, but it looks like it's going to do that. As indicated by the histogram, things are moving on south, as well in the relative strength, the stochastic, and then into the Williams. Now, Boeing is a little bit behind Caterpillar, but in my mind, I think that these charts, these oscillators, portend a declining stock price for Boeing, at least in my humble opinion. So, that's it for today. That's ChewDog Charts. Thank you.